Okay guys, so in this video we're going to talk about is there another upcoming stock market crash. So as a pretty big stock market fall back in March, and then Donald Trump came in and passed a $2 trillion stimulus package, and then of course that stimulated buying as well as reducing interest rates to zero. But as you can see guys, we've already been downtrending a bit. So if you take a look at the Dow Jones Industrial Average, the Dow Jones is basically 30 of the largest companies in the United States that make up a great majority of the US economy. So as you can see here, we're already downtrending a bit over the last couple of days. And I believe a lot of this downtrend is anticipation of April earnings season. So April earnings season is really going to be brutal for a lot of companies that have already seen huge reductions in revenue, and for companies that basically closed their doors to receiving business. So I'm going to give you guys 3 reasons why I think that we could see another stock market crash in the future. So I just want to go through those 3 reasons really quickly. So if you guys enjoyed this content, be sure to hit the thumbs up button and subscribe. So the first reason is, of course, the coronavirus pandemic. So the coronavirus pandemic is basically the whole cause of the first stock market crash we had anyway. And I wanted to show you guys a graph because I think pictures explain more than words. We're dealing with basically an exponential graph here. So as you can see here, an exponential graph creates like a hockey stick. So when you're creating like a hockey stick in terms of cases, we don't know how much further this is going to go. According to this website, we've already had over 1.2 million cases, guys. So this is definitely going to affect the stock market in the short term. When people are not feeling well or sick, they're less likely to go out in public, they're less likely to go to work, and a lot of people have basically been either working from home or just basically taking a permanent hiatus, indefinite hiatus at their jobs. And that's one of the things I'm going to talk about next. But I think this whole corona thing is not over, and the fact that we saw that stock market crash basically down here when there are much fewer cases, I think that this stock market could go potentially even lower. So this, for me, this is still a big issue, guys, and even especially in the United States. Now the United States has the most reported cases because the United States has one of the world's best healthcare systems. So as you can see, guys, one of the reasons why the cases are so high because the US has tested the most people. So basically what's going on is that the US economy is greatly going to be affected by the coronavirus crisis, and I don't think we're out of the clear yet. I think that the Dow Jones could head down even further, meaning we could see another stock market crash where you could potentially get stocks at a cheaper price. So that's my first reason. So the second reason is unemployment. So this is something that I didn't expect to skyrocket as much, but it looks like unemployment is skyrocketing in the United States. So I'm looking at an article here on Forbes that says unemployment rate shoots up to 4.4%, but the worst is yet to come. So it says basically unemployment rate in March ticked up to 4.4% from 3.5%, but the data doesn't yet reflect the full magnitude of millions of job losses in the United States of job losses the United States has seen over the last 2 weeks alone due to coronavirus pandemic. So guys, this whole unemployment is going to have a big impact on the stock market. And as you can see here, I just want to get to the meat and bones of the article. It says the coronavirus outbreak could cost 47 million jobs next quarter. That would translate to an unemployment rate of 32.1%, well above the 24.9% rate during the Great Depression. So, wow, that's an amazing estimate given by the Federal Reserve Bank of St. Louis. Wow, 47 million jobs lost, guys. So basically, we could be moving into a territory where almost a third of society cannot find work. So that is going to affect a lot of companies who earn revenue, because when people aren't earning money, they're not spending money, and this makes the economy contract, and we're heading into probably the biggest recession in United States history. That is not good for the stock market. And the third reason why I think the stock market could crash is, you guys take a look at the earnings season. So what earnings season is every 3 months, companies are required by the SEC to report their earnings to the public. This is kind of a way to stay transparent and things like that. So what usually happens is through January through March, earnings season is in April, and then through April to June, earnings season is in July. So we're going to see the worst of this basically not just in Q1 but in Q2 as well. So as we see here, guys, we could see a huge correction within the next week to 10 days here. I was just taking a look at Markets Insider. You can take a look at Markets.Business Insider and the earnings calendar. So some of the biggest players we have reporting earnings in the next 10 days: Johnson & Johnson, JP Morgan, Bank of America, Adobe, Citigroup, BlackRock, Morgan Stanley, Goldman Sachs. So these are just some of the bigger companies out there that are going to be reporting earnings, and it'll be really interesting to basically see how the market reacts to these companies reporting earnings. So I think that not only are we going to see a slowdown in revenue in Q1, but in Q2 we'll probably see even worse numbers, because as I alluded to earlier, that bank expects 47 million people to lose their job. So we are not out of the water yet, guys. Really hang on to your hats. This is probably, this is just a great time to basically be very, very picky on stocks you're buying. And like I said, raise cash. And when I say raise cash, I mean be willing to buy stocks at cheaper prices in the short term. You definitely want to free up some money by April, May, and June, because you're going to see stocks trading probably at cheaper prices as these earnings reports come in, and a lot of them aren't going to look good. So guys, that's kind of just my warning out there. I'm not trying to like make you guys get worried or something like that, but I'm just putting out those 3 points that I think could really affect the stock market in the short term. And we're not out of the clear yet. So we've basically got Q1 and Q2 should be the bulk of the damage. So it's going to be really interesting to see these earnings reports come in April and in July for quarter 2. So, but the good thing is that amidst all of this chaos, if you're thinking long term, we could come out of this by 2021, 2022, 2023. You could be sitting pretty nicely, and a lot of the stocks that you bought at rock bottom prices, as was in a similar time, if you guys remember back in 2008 during the financial crisis, there were stocks trading at ridiculously cheap prices. So I want to just show you guys kind of what I was talking about just earlier on how basically history repeats itself. So if we take a look back at what happened back in 2008, the stock market crashed a ton, and then it recovered and went much higher. So the funny thing is, guys, is that markets are driven by human emotions, and it just seems like history repeats itself again. So even though this is a very frightening time, even though that we're probably going to see stocks trading at lower prices, just remember that in the long run, we're innovating, people are getting smarter, we're doing things better. Technology now is much better than it was 10 years ago, and it's much better than it was in 2000. Businesses are going to come out of this stronger. Only the stronger businesses will survive, and that will make the U.S. economy and the global economy much better in the long run. So guys, that's it. I want to wrap up this video, give you guys my opinion on where the stock market is going to be going in the short term. Be prepared for a crash, and make sure you don't have all of your money tied up in too few stocks, because if your stocks crash, you'll be down a ton, and you might not be able to basically hold on until stocks recover in the long term. You may be forced to panic sell. So don't avoid that. I like to put no more than 5% of my money in any stock. I know some people out there like to be a lot more aggressive, but I like to sleep calmly at night. So that's just my personal strategy. So that's it for now, guys. I hope you enjoyed this video, and please give it a thumbs up and subscribe to my channel. And have you gotten your free stocks? Be sure to check out the links to Robinhood and Webull. You can get a free share of stock at Robinhood and 2 free shares of stock at Webull. So that's it for now, guys. Until the next video, take care.